Hello everyone, welcome to Just Invest Today, and today we're talking about Alibaba, a stock analysis. 5 reasons why Alibaba stock is a buy and it's going to take off in 2022. We're going to get into this article. What are they thinking about Alibaba and what's happening in the market? Is there a switch in sentiment going on? Guys, before we get into this video, like it, subscribe to my channel, man. Click that like button, click that subscribe button right now. I'm providing you with so much new content, so subscribe, click it, click it, click it. So man, 2001 was a rough year for all Alibaba shareholders. We've seen this huge dip, 55% dip, but in the coming days, man, we've seen a little nice price action from like 117, 11% all the way to $129. It was at $133. We are seeing some kind of price action with Alibaba. Is this a sentiment shift in what's going on in the market? Let's get into it and let's see what people are thinking about Alibaba. But remember, Alibaba has been getting crushed because they think it's an economic slowdown, regulatory pressure. Alibaba's competitive sphere is getting worse because we have companies like Tencent coming in, PDD. We have companies like Meituan, like all of these companies are coming into the market and taking share from Alibaba. So remember, that's like one of the main bearish thesis on Alibaba. But remember, this analyst says no, stuff is gonna come back, man. It's because remember, Alibaba has been getting crushed, 15% sell-off, man. So he sees this coming back in 2022. He is gonna list some reasons why he's seeing this. So the outperformance was the track on continued Friday with the US listed stock of Alibaba up 3.5% pre-market trading. One of China's biggest investment banks told Barron's he sees 5 factors behind the recent turnaround for Alibaba. In short, investors are buying the stock because they may have finally hit rock bottom. That's for sure, man. Remember, the lowest price for Alibaba was like at $108. Can you imagine starting your first position in Alibaba at $108? Man, you would be, oh man, you were so lucky if you were able to get at that price as your first starting position. It'd just be crazy, man. I would be so happy if I had that position. But anyways, I still have a crazy amount of upside for Alibaba, even when I bought it around 260 and I all the way averaged down all the way to like 180, 190. So current evaluation is the first reason cited by a lot of Alibaba's recent outperformance. It looks cheap, especially because the company is a clear market leader in Chinese e-commerce. Yes. That is one of the main reasons why I love it too. It has a dominant market position in the fastest growing economy or the biggest economy, especially as it becomes the #1 force in the world. So as more people get out of poverty, go into the middle class in China, and more internet penetration, it's just gonna get bigger. Like look at this revenue growth. 2018, 58%, 50%, 35%, 40%. Guys, this is not small. This is a company at like a 400 billion market cap. 352 billion market cap growing 40%. It's got to kind of go down back to 22%, 24%. But that is huge. Remember, companies like Apple are not growing that fast. And Apple, people see Apple as a $1 trillion market cap company and they're not growing at 20%, 22%, 40%. Like that's in the past for Apple. But we have companies like Baba as the #1 dominant e-commerce company growing at 20%, 40%. Like that is insane as the market leader, free cash flow positive, large barriers to entry in that e-commerce space. Alibaba definitely is it as a dominant market player. So that's the first reason. Current valuation. Sentiment around valuation in Chinese equities more broadly has been echoed by strategists. Are valuations really attractive? Yes. The index valuations 12x at recent year lows and at a significant discount at global equities. And think about this, guys. If you don't trust Alibaba, why don't you buy a Chinese internet ETF? Buy this ETF. Like, this is not investment advice, but think about it. $101 crashed 64%. Are you telling me that this won't recover? This owns the best Chinese internet stocks like Tencent, PDD, Meituan, Alibaba. Like they own all of those companies, JD.com, Baidu. Like I feel like this is gonna reverse heavily. Like it was at $102. I think in the next 5 years, this is gonna be a big come up. Even if you don't want to own any one company, this is a good option. It's almost like a SPY ETF or an index ETF in the top 500 American companies. It's pretty much similar to that. So if you don't want to own it, I think that's an amazing option you can have if you want more safety. So the next reason, Alibaba high-profile fund manager Vice Chair Charlie Munger was catching the eye of other investors who were following suit. Munger's daily journal recently doubled down on Alibaba stock for the second quarter. So this is a huge bullish sign. Having Charlie Munger buy into Alibaba, triple purchase of Alibaba, you have to remember Charlie Munger does not buy stocks. He barely buys any stock. Like, I think the last stock he bought was like Wells Fargo maybe. Like, he doesn't touch stocks unless it has a huge margin of safety. And remember, he is so bullish on the Chinese economy, and just he doesn't even see the huge downside risk that other people see. Like, people see Alibaba is going to be privatized, but he doesn't see that risk as everyone else. Charlie Munger is super bullish on Alibaba, and you already know other investors, other institutions see that bullishness, so they might start dabbling back into Alibaba. As remember, half of these institutions already sold off Alibaba, so they might see it as a bullish sign to get back into it. If Charlie Munger, one of the best investors, are kind of dabbling back into Alibaba, because the dip is just unbelievable. A 60% dip in the stock is like almost unheard of. The regulatory picture, which has dodged Alibaba last year, seems to be getting clearer. This is another bullish signal. People think the anti-monopoly stuff is kind of over, or they're kind of getting like tired of it. And remember, they think Alibaba is getting hit with this anti-monopoly stuff. It was targeted. It was only enforced on Alibaba, on Jack Ma, right? So people are seeing what the government is doing, and they're thinking more maybe that like it's more relaxed, it's for everyone, is to actually get a clear view of the market instead of just singling out Alibaba. So people are kind of reversing that thought process, like slowly but surely, in my opinion. So the view is kind of getting clearer in that aspect. And think about this as well, is that there was no anti-monopoly talk with the government this year. Like, it's not a focus. Like, the focus last year was anti-monopoly, like hit all these companies. As they already done that, they intensified that. Now I think they're going to slow that down, still focus a little bit on anti-monopoly, but not crater companies like they did last year, and not going to be the focus, as they didn't even talk about anti-monopoly this year when Xi Jinping was talking about it, when it released as things they want to focus on this year's economy. So I feel like that's a huge bullish signal for Alibaba, man. Another factor investors in Alibaba stock this week could be major sale of assets by Tencent. And you remember, Tencent has been selling JD.com and C. And people are kind of like they were, whoa, what's happening with Tencent, man? Like, is the government starting to go after Tencent? So people are like leaving Tencent to go into Alibaba now. So he thinks that people are leaving Tencent to go into Alibaba because they think the government is going to crack down heavily on Tencent now. And they're divesting these stakes because the government is looking at Tencent harder. So people are going to move their money in Alibaba as a safe harbor in case the government strikes down hard on Tencent. The momentum of positive sentiment from the company's investor day last month may be another factor behind buying. So all of these factors may help boost the company's share price in the short term. So remember, the investor day month was a success. They kind of laid out a nice vision on what they're seeing in the market and how they're going to kind of compete and get better. Like, remember, they had a whole presentation. This is my most bullish signal. It's like the cloud. They had a whole presentation on the cloud and how they see cloud expanding in the market. And maybe, remember, cloud might take up majority of their like revenue in the future. Like, cloud is just gonna get bigger, bigger, and bigger. It's growing at like 15-20% yearly. Like, it's amazing. Like, that's just a market, but in that space, Alibaba is the number one cloud computing company, and that's gonna be generating the most revenue going forward, in my opinion, like later on, like 5-10 years down the road. So that's a huge bullish, and that's one of the biggest takeaways I'm finding from the Investors Day. Even though the e-commerce business is still expanding, they'll have businesses overseas in Southeast Asia, in Turkey. So That's a huge bullish signal. But overall, this was kind of a bullish statement, a bullish article. So we're going to see what's happening. We're going to see what's going to happen in 2020 when it comes to Alibaba stock, its shares, and what's going to happen, man. So tell me what you think about this video. Like it, subscribe to my channel, and I'll get back to you in the next video. Peace!